Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Pierre Debbas. He's the Managing Partner at Debbas to discuss the future of office space and outlook for housing in 2022. Pierre, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's great seeing you as well.
All right. When we think about what it will look like for the longer term with office space, do you think things have changed?
You know, we're going to know the answer to that in the next year or two, because right now you've had so much turmoil in the office sector across the country. No one really knows how this is going to shake out. There's a number of reasons I make that statement. Number one, we had so much, federal funds that flooded the marketplace through second round of PPP stimulus that was issued earlier this year. And a lot of that has kept tenants, a certain percentage of that had been used for office rent. And a lot of that kept tenants current and kept tenants paying the rent, where we're going to see in the next year when leases come up for expiration. And also we have a better idea of what the economy looks like without, enhanced government monetary assistance, how tenants re-envision their space, what's the profitability of, a number of different, sectors of the economy and how companies do in maintaining these bills. And in reality, when is this hybrid policy or this remote work going to come to an end? You see the major institutional companies, they keep pushing back their return to the office. My personal opinion is that people aren't not back in the office due to, COVID or Omicron or whatever variant we're talking about. This is part of life. This hybrid working remote, with certain jobs being permanently remote and majority of people not being in the office 5 days a week. I think that that's going to be part of how we operate, for perpetuity, quite frankly.
Right.
And that's
I would agree with what you're saying there, for sure. I mean, especially when you look at the younger generation as Gen Z really starts to take up a majority of the workforce, this is something that they're demanding. Companies across all sectors are competing for the same limited tech talent, and it's a driving force. I mean, we saw a number of the big investment banks dial back on their rhetoric in terms of, if you want to make Manhattan money, you need to come into Manhattan. That's just not the case if they want to attain and retain talent.
I 100% agree. I can tell you, as a small business owner myself, I own a company of about 50 employees. I'm using our firm's permanent hybrid, model as a recruiting tool. We're trying to recruit from bigger companies that are taking the position of, you better get back to the office full time. Like you said, the statement you refer to is of Morgan Stanley's CEO. If you want to make New York money, get back to New York. From our perspective, we're using it as a competitive advantage to recruit people from, companies that we may not have been able to recruit from in the past. And I think you're going to see, a lot of companies take the same approach that I'm taking, and that my partner Michael is taking, in that this is going to be something that we're going to live with forever. And why not use it to our advantage? And I just think it is what it is at this point. We're talking, Joe, we're going on 2 years, of living like this. This is not a phase of life. This is something that is part of our lives now. We've learned a lot from it. There's been some positives, but I will tell you, this is part of life moving forward.
Right. And then as a small business owner, your largest fixed costs, of course, are going to be office space. And we all know Manhattan office space is unlike, any other in terms of cost. Maybe few cities can compete with it. But it could just save companies so much money. Or perhaps you don't need 3 offices in Manhattan. You consolidate to 1 office, or, you consolidate smaller satellites.
Definitely. I think you're going to see that. It's happening now. The end of the day, what really is going to be the question is that this hybrid policy, how much does it actually enable companies to scale back their space? And I don't think that you're going to have a lot of companies, even if you have a hybrid policy, you still more or less need the same amount of space that you currently have, maybe with a small reduction. The companies that are really going to profit are the tech companies that, end up having certain positions that are permanently hybrid. And they slash their office space as a result of that. Sorry, permanently remote, not hybrid, permanently remote.
Right. And, again, it's interesting when you talk to small business owners such as yourself, because you have the ability to be a little bit more nimble than, let's say, massive corporations. As you're recruiting for new talent, this is a little bit off topic from real estate, but are you finding any challenges with creating that culture?
So as a law firm, it's a very stressful profession, and the legal profession is one of the most stressful professions out there. One of the things that always made our company, for instance, a great place to work was the camaraderie, the people, the socialization, the events, things of that nature. That's been compromised by COVID tremendously. We've luckily in the past quarter been able to start doing, regular monthly social events as the entire group, which has been great for morale. So, when you're talking about, how this impacts companies like us, yeah, I mean, it's a lot of extra work to learn how to navigate this and to maintain, those things I'm describing in terms of morale and, culture that really have been suffered a lot because of COVID.
Right. Do you expect the housing market to thrive like it did in 2021? I mean, it seems as if on the lower end, especially first-time home buyers, they're just simply being priced out of the market. I mean, at some point, they're just not going to be able to afford homes.
No, you're spot on. I mean, what we've seen in the last 2 years of the housing market has been unprecedented. I mean, pricing appreciation, I think, is up close to 25%, year to date, and it's been pandemonium. That was really sparked by the pandemic. No one would have thought in March of 2020 the pandemic would have resulted in such a massive amount of relocation across the country from millions upon millions of people. And then all of a sudden, there's in economic uncertain times, they're buying homes. And really, what we couldn't have predicted was the desire to own a home and also have more space, given the fact that people are working from their homes. And it changed everybody's outlook in terms of, what the housing market should be and my desire to buy a home. I think that you've seen so much demand, even with the fatigue of first-time homebuyers being priced out and just waving the white flag and continuing to be renters. I'm bullish on the housing market going into next year. I think, in my opinion, the only things that are really going to derail the housing market is if we really have an economic collapse or inflation really, brings the economy down significantly, and if interest rates go up significantly as well. Third rates have already gone up, marginally in the last couple of months. If you have 100 to 200 basis point increase in rates, that'll obviously bring down pricing and the demand to buy. But I don't know why they would increase rates significantly anytime soon. It seems like any rate increase is going to be done in a staggered manner where it's phased in, in small increments. And if that's the case, I maintain a very bullish outlook on the housing market next year.
Yeah, well, speaking from experience this year, just buying a home, I saw it on a Wednesday, it was in contract by Monday, which it just moved so fast. And with everything being able to be done digitally, I never even met my attorney face to face. It was myself and my broker at our closing. But it's so interesting. And I also want to get your thoughts on private equity buying up lower end homes as well, and how can a single home buyer possibly be competitive with that?
That's what I want to say. The stat I most recently read was that 25% of all home purchases were by investors. And, historically, you would think investors like, normal people that saved money and want to diversify their portfolios and they're investing in real estate. But it's really, the Blackstones and the Goldman Sachs of the world that are buying these houses in the thousands. I mean, it's incredible to think that you could be renting a $355,000 house, which is the average price of a house today, and Goldman Sachs is your landlord. And why, it's a bizarre concept, but it's true. I mean, Blackstone acquired a fund that owned, I think, 17,000 houses a couple months back. And what that's showing you is the returns and the stability of the housing market, and how some of the most intelligent and successful investment banks and private equity funds in the world are gravitating towards this asset class. And also the fact that we live in an extraordinarily high inflationary time right now. I believe the inflation rate last week was the highest in 39 years. And real estate is often viewed as a hedge against inflation, especially single family homes that have 1-year leases where rents adjust on a 12-month basis, where you're not locked in for a commercial lease of, say, 10 to 15 years, where you can adjust the rent for, based on inflation. So that it's really, interesting how long this goes on for. And how much, do the private equity funds buying up these properties continue to price out what would be first-time home buyers, which is really the unfortunate result of all the demand and interest going into the housing market.
All right, Pierre, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.